In the last 6 months, the world's most valuable chip maker Nvidia is down nearly 20%. Once the poster child of the AI boom, Nvidia is now caught in a web of global uncertainty, rising competition, and falling demand. On the other hand, geopolitics is reshaping global tech. Rising tensions, stricter US export controls, the race to dominate artificial intelligence, these shifts are not just about diplomacy or security. They're redrawing the global tech supply chain. And the first casualties, US tech stocks. But here's the question for Indian investors. Is this fall a signal to buy? Let's quickly break it down. Nvidia's market cap exploded by $2.2 trillion since 2023 thanks to the AI boom. The company supplies chips to Microsoft, Amazon, and Alphabet, the tech giants building the next generation of AI infra. And yet, on Jan 27th, Nvidia shares dropped 16% in one day. Why? A Chinese AI startup, DeepSeek, launched a model that matches Nvidia's performance at a fraction of the cost. Another Chinese giant, Huawei, is testing its own chips. In short, the AI battlefield is crowded, and Nvidia is no longer the only warrior. Then comes Washington. The US has banned Nvidia's high-end chips from reaching China, its biggest market outside America, and new AI diffusion rules are being drafted. These could restrict the sale of AI chips to Israel, India, Switzerland, and Saudi Arabia. So yes, Nvidia's growth story is now tied not just to innovation but to geopolitics. Let's also talk about valuation. Nvidia's PE ratio is down to 36x, cheaper than last year's 55x but still high. Its PEG ratio is at 1.1, fairly priced but not a value buy. Revenues $130 billion driven by data centers. EPS up 130% to $2.99. So is this a correction or the beginning of a long-term slowdown? What should Indian investors do? Indian retail investors can invest up to $250,000 a year in international markets under the LRS route directly or through ETFs. Buying Nvidia now may look tempting. After all, over 5 years, the stock has returned 1500% and it also has a CAGR of about 70%. And this is one of the fastest growth for any stock in US market. But experts urge caution. As per Vikas Gupta of OmniScience Capital, it's better to buy a basket of AI stocks than bet on Nvidia alone. Competition will rise and diversification is key. And there's more. As per Prateek Oswal from Motilal Oswal AMC, understanding a company like Nvidia from India is not easy. A Nasdaq 100 ETF gives you Nvidia and Apple, Microsoft, Amazon all in one go. The Nasdaq 100 index is up 0.25% in the past month, but sentiment is shaky. The S&P 500 fell 1.8%, though losses were capped after Donald Trump paused tariffs for 90 days with a China exception. Meanwhile, Norges Bank Investment Management, the world's largest sovereign wealth fund managing $1.78 trillion, posted a loss in Q1. Why? Falling US tech stocks. But they are not worried. They've bet big on American tech and they are staying the course. So what's the bottom line? Nvidia is still a titan, but the world is changing fast. Competition is rising, regulations are tightening, and prices are correcting. If you're investing from India, think long term and think diversified as per experts. Don't just follow the hype, follow the fundamentals.